All right, folks, welcome back. This is our daily chart for the dollar index for our midweek review. All right, so we had an inside day today. Fed Chair Powell was scheduled to speak at 10 o'clock in the morning. And we had pretty much a lackluster dollar index. Inside day is a lower high than the previous day and higher low than the previous day. Okay, so we're still inside that bullish order block. We have a potential swing low in here. So we'll see if it wants to expand on the upside. I'm still favoring that because I want to aim for this up here. And I don't see anything here that is clear as a reversal. Not to say it can't, obviously, but I'm sticking with the underlying higher time frame narrative, dollars bullish. All right, here's the hourly chart on the dollar index. And again, yesterday's pretty wild price action. Came back down into the bullish order block here. So dropping down to discount relative to the range low and high of that dealing range. Came all the way back down, rebounds the buy side imbalance, sell side inefficiency. Bullish order block, trades into it here, and then comes off the lows. I have a secondary video that's below the link of this one. It is a recording of today's price action on the Eurodollar and dollar index and basically mapping out the daily low using this market profile and then going along throughout the day, at the respective PD arrays. So just for tape reading purposes, it's nothing spectacular because we're inside of a small range. All right, here is the 15-minute time frame. Down here, when it was hitting this level here, which you'll watch in the second video, when it trades down in there, I'm looking for it to hit this, create the low of the day, rally. I draw this out here as it hit the order block. I'm expecting the rally. Consequent encroachment is seen here. Goes down just this low, a little bit below it, then rallies, and then draws up into the rejection block and ultimately on the foundation that this imbalance, there's lots of liquidity up there. Okay, so I favor that the dollar goes into this area here. Even if it punches into the discount low and then rejects and just continues sideways or goes lower, that to me is where I'm focusing. And at the time of this recording, the recording of today's price action, which was rather lethargic, but still precise enough to call the low and work towards the premium array. The idea would be tomorrow we want to try to see if it can get out of this range. Now, as a reminder, it's non-farm payroll week, so Thursday and Friday we do not trade. We have absolutely zero interest in trading those days. But for the purposes of volatility study, we want to see how it trades within this range here. That range being this high and that low. Eurodollar daily chart. Here is the sell side imbalance, buy side inefficiency. It almost traded up into that the other day, and I'm watching to see if we do get a failure on dollar to go higher, then euro will want to draw up into this area here. I like the idea of the order block being traded to here. I like the imbalance, the fair value gap. It trades into that. A nice little run up in here. We have an inside day here. So, we could potentially see a larger range day tomorrow or on non-farm payroll. The only problem is we've had two Fed chair calendar events, today and yesterday on Tuesday. And it's just simply, it's a gamble. So I don't know if we'll get that run higher on dollar into that fair value gap and then roll right on through it and continue higher for that higher time frame weekly imbalance that's shaded in blue in our chart, or do we get the higher run here on Eurodollar? It's too early for me to tell, and today's price action is just simply consolidating. It's range bound, so it's indecisive in the sense that it can go literally either way. So when we have that, we want to wait for the algorithm to show its hand. We want to wait for the market to give us a displacement. Once displacement is seen in price, then we can work with that. Right now, all they're doing is accumulating large orders and letting the sentiment build up once the algorithm comes out of the range. What range? The range that was created yesterday. Okay, so it's going to have to come out of that range for us to find high probability consistency. And while we're inside the high and the low of yesterday's trading, it's basically low probability, kind of like what I was telling you last night, to expect that very thing. All right, imbalance over here. All I did was thicken these lines up and carry them out in the future. Rallied up into that, tank down, and then today's price action, just back and forth, small little range inside of the previous day's high and low. Imbalance in here with the swing low, I like that, and you'll see that on the 15-minute time frame. You also see these levels in the recording I have, where I'm anticipating a run below this low here, which would be the opposite of what I was showing you on the 15-minute time frame of the dollar index. You'll watch me mark up all this business here, as it happens, so that we can read it. And again, it's just for tape reading purposes. I'm going to speed the video up, obviously, because it's all day. I mean, from here all the way down, and presently still recording. So I don't know if I'm going to take anything off the end of it. Maybe, maybe not. I don't know. But for the purposes of reading the tape from this high down into here, it's in the video. All right, so pound dollar daily chart, getting really crazy in here with its indecisiveness. Again, dealing range from the previous high and low. We're inside that with a daily inside day. The sell sign imbalance, buy sign inefficiency, we traded back up into that today, much like we saw with the dollar index, just the opposite. Trades lower, attacks the sell side liquidity in here, rebalances all of this in here as well. The current market structure that's in play right now, this is not as clean as you would want for trading. It doesn't have a clear identification for direction, because it literally could go either direction. And because of that, and the weekly profile that we're under, which is non-farm payroll, there is such a, well, let me say it this way. There is more probability of failure than of success trading what we have in the market right now in this chart. There's nothing really definitive. Now, one could argue and say, okay, we came down here, rebalanced, took the sell side liquidity out here, accumulating sell stops to go long to pair up with the buy side liquidity here. Okay, great. That would be nice if the dollar index was definitively bearish and I could see that it wants to break down. That would be something I would look for. But because I don't have that clarity in the dollar index, it becomes low probability. And again, we're inside day on both the, well, actually all three of them, the dollar index, the euro, and pound dollar. They're all inside days trading on Wednesday. So, if we get another small range day on Thursday, we'll probably get a large range event for non-farm payroll. But, I don't care because I don't trade that. And here's the 15-minute time frame. I'm just exaggerating the inside day. Previous day's high, previous day's low, and we traded in here. Okay, basically, buy side liquidity built up, rebalance. Look at the bodies of the candles, respecting the hourly for the sell side imbalance, buy side inefficiency. Small little run up in here, rejection, trades lower, breaker here, and you would see this on your 5-minute chart. Here when it opens, trades up into it, sells off, fair value gap, trades into that range a little bit in here, breaks lower, comes back inside the order block here, mean threshold, breaks lower, below an old low, doesn't quite get an institutional order flow entry here. Would have been nice to see it get in there, and then run for that liquidity here, down into an order block. I don't know. Like I said, this is so 50-50, let's put it that way. Because one of the things I've been teaching you is if you can justify both sides of the market using the content you're learning, that's not high probability. And you have to be very careful not to be in a rush to just be doing something and say, okay, well, I can clearly see it's set up for a buy or it's clearly set up for a sell, and not at least investigate the other side and see if there's something you can mark up and see with the content and concepts that I'm teaching you. If you can see both sides of the marketplace with them, that is the definitive response for a question that would ever be posed to me. How do you know when it's low probability? Well, you can see both sides of the marketplace with the concepts. How do you know and define the market when it's high probability? When the market is slanted one-sided, you can't really justify the opposite side, and the side that you're on side with your analysis, that's the highest probability directional bias. It doesn't mean you're going to be right. It doesn't mean it's 100% accuracy. It just means that's how you define it, and that's the process of going through it. And that's going to be it for this one. And like I said, you have a second video below this one. No homework tonight. Just watch, see how we trade tomorrow and how we deliver on Friday's non-farm payroll. Until I talk to you tomorrow, be safe.